was that one time that you yourself?
Realistically or metaphorically? 2015, when the Swiss National Bank went under, or my account went completely negative, like by about 37k.
How did you build yourself up to be the person you are today?
Ironically, getting rid of my ego and speaking to people that know a lot more than me. Yeah, I know. Ironically, exactly, yeah. Everyone wants to make it as a day trader, and they want to follow how hedge fund traders are doing stuff. But they have to remember that bank traders and hedge fund traders are on 300 grand a year, and then they get their bonuses and commissions. They have the security of being on a massive salary, 10 times the UK average. When people are going out and trying to trade, full time without that security, it does affect their own personal trading.
Hey guys, and welcome back to another episode of Trader Talk. We are still here with David, who in last week's episode, you would have heard that he has worked at TradingView, he has worked as a broker, and he has an extensive background in this industry, which is something that we're not used to hearing. So we're going to jump straight back into this conversation.
Everything we've spoken about in part one, all the strategies and the way you look at the markets, I totally agree with, especially because from when I graduated from university, my first job as a graduate, my second job in fact, was getting into the recruitment space for hedge funds and investment banks, and I dealt with quants a lot. So sitting down and speaking to them, and I mean, these guys are the real deal. They laugh at like retail traders a lot, but they know what they're talking about and bringing in the big bucks for these big banks. So I totally agree with it, especially because I've had to read Flash Boys, and looking at Flash Boys, I mean, a guy from Russia who's a software developer going into the trading space to literally build an algorithm and abuse latency just means like, wow, like fundamentals and what it is actually that's going on is big. It's a big factor.
Yeah, no, absolutely. I think there's a whole part of trading that's ignored by the retail trader. I think I mentioned last time infrastructure. I mentioned, I think cost per trading. I mentioned, talent. Mm-hmm. These are all things that are ignored, and there's a lot of focus on strategy and not all the other components.
Absolutely.
Even, for example, if we think about remuneration at hedge funds, right? Everyone wants to make it as a day trader, and they want to follow how hedge fund traders are doing stuff, or bank traders are doing things. But they have to remember that bank traders and hedge fund traders are on 300 grand a year, and then they get their bonuses and commissions. Mm-hmm. So they have the security of being on, a massive salary, 10 times the UK average in many times, as well as then making the big bucks on their bonuses. So when people are going out and trying to trade, full time without that security, it does affect their own personal trading as well, and it's a completely different game. There's so much more risk attributed to the retail trader that they're not baking in according to kind of their whole life, if that makes sense. So there's lifestyle risk with trading as well as just strategy, I guess the risk of markets and things like that. So there's loads of other things to consider when they're trying to compare themselves to buy side and sell side traders, I guess.
Yeah, exactly. And there's actually an example. I remember I was speaking to a quant analyst, and I asked him, what do you base your analysis off? Like, because they use ML, AI, and I was like, how do you build it? Like, where do you base these off? And he told me, he gave me an example. He was like, for example, let's say we're investing in a company in China. And he was like, talk about stocks. And he was like, I'll look at, we'll get data from the satellite for how many cars are parked outside their factory and base it off their production. And he was like, and that will give us, that's one signal. And then we base it off their economy, and everything just builds up into one little algorithm that determines if we're buying or selling.
Yeah, so there's a lot in the hedge fund world, and there's a big business in corporate espionage. So what they will do is they will hire private detectives to actually infiltrate a corporation in certain ways. Or they will, I guess to some extent it's illegal, But it happens. It's like, it's like tennis. It's like a game of tennis. Someone will do it this way, another one will do it that way. But corporate espionage is a huge, huge issue, and I guess a benefit as well in hedge fund land. It's not necessarily insider trading, but it's definitely not legal in many respects. I think the example that you gave with the satellite, I have heard that. I think one of the biggest and most terrifying examples that I've heard is from taxi data. So there was a study that was done about New York taxi cabs.
Right.
And it was a study that was done just before Fed meetings. And what it showed was that taxi cab data from the big banks just before a Fed meeting would indicate more journeys to the New York Fed on the Tuesday just before the Fed meeting, right? And the New York Fed is who does a lot of the, it basically operates their market operations, right? They're who is buying and selling, doing the repo stuff, doing treasury buying, etc., etc. So it did show the relationship, and you can Google it. It shows the relationship between big banks and the Fed, which is not a conspiracy. It happens, big banks are systematically important. So they do need to know and have communication with the Fed's trading desk, because at the end of the day, they're the ones that are actually functioning and providing liquidity in the market. But things like that definitely do happen. And a lot of people, will shout, "Oh, it doesn't happen." It doesn't. It does at the end of the day.
Mm-hmm.
A lot of what hedge funds do is insider trading. Like, let's not get that, the wrong way here. A lot of what they do is insider trading. Steve Cohen, very big manager of SAC Capital, he got done for insider trading. He was banned for a good few years. So it does happen.
Yeah.
So at the end of the day, you can say that institutions and buy side are fantastic trading, which they are. But also there's a lot of dubious shit that goes on too.
Mm-hmm. Yeah, I agree. And what are your views on the sell side?
Well, the sell side is, they're just brokers at the end of the day. Sell side research is probably, because of regulation, MiFID II and stuff like that, is probably some of the shittest things to ever exist. All you see is a 40-page document from JP Morgan with a ton of charts that are all basically correlated that mean fuck all. There might be one good thing out of there. I get them all every single day. And I'm like, all right, well, there's one from Goldman. Goldman's usually actually quite good. JP's can have some good stuff. My favorite is the Flow Show from Bank of America, because it's showing you how many assets have moved. But, it's not like they're really showing you anything that crazy. It's all just to give to their clients to make them buy stuff. So the sell side is really just brokerage. That's all it is. Prime brokerage. That's all it is.
Some of them have had a bit of a shake-up as well. I mean, in the previous years, I know Deutsche Bank weren't in a great situation. This is when I was working in the space.
Yeah.
UBS bought out, and was it HSBC?
UBS bought Credit Suisse.
Credit Suisse, that's it. Yeah, Credit Suisse got bought out by UBS. And I mean, a lot of their systematic traders wanted to move over to the buy side.
Mm-hmm.
Did those days affect you guys as well? When where were you working back then? I think it was 2021.
I was at TradingView then, so no, different side of the market then.
Right.
I think 2017, 2018 was when I was with multi-asset, with the small, medium-sized institutions. But in terms of what happened with Credit Suisse, I think there's a lot of interesting stuff that we can take from that. The fact that Credit Suisse basically had a 2008, as well as other banks, Silicon Valley Bank, First Republic. We had a 2008 last year. Mm-hmm. It's just there's so much central bank protection now that it was a news story for 2 weeks, and I don't think people realise the extent of how bad last year was.
Yeah.
In terms of the banking world, in terms of how things got. It was 2008. Like, there's no two ways about it. It's just there was so much liquidity and so many backstops in the market that no one gives a shit anymore. Which is why I say to people, all right, the market's fallen. We're not going to be able to get a housing crisis, and we're not going to be able to get a banking crisis anymore. Don't shit yourself. If there's a dip, it's there for buying at the end of the day on the S&P 500 or NASDAQ.
Yeah.
It's like, honestly, last year was crazy. Really, really was crazy.
Yeah.
Much.
But I think it's picked back up though. We're doing, as a whole, the economy is doing better.
I think we're facing a slowdown. That's why they want to start cutting I don't think it's an inflation story as to why they're cutting. Inflation's back down. And I think the reason that they are now needing to cut is because data's slightly rolling over. Like we're just seeing unemployment tick up and things like that. U6, which is a measure of US unemployment, was at 7.6% today. It was expected to be at 4.4%. So nearly double. Like that's double the extent of the miss. So it's okay. I'm not shitting myself. I never really shit myself though, apart from once. But I do see things, coming to a bit of a slowdown towards the end of the year, which is why there's different strategies now that I'm looking at with regards to how I'm going to look at equities, for example. Less momentum, more, as we mentioned before, mean reversion. Maybe looking at things like getting longer dated and bigger strike straddles in the options market. So I think that's where we're going to have to play.
When was that one time that you yourself?
What? Realistically or metaphorically? Whoa. Okay. Well, yeah, no, metaphorically. I think 2015, when the Swiss National Bank went under, was a really situation. I think my margin my account went completely negative, like by about 37k.
I think this is when I first started trading, and I remember, I think I must have been in a trade, and it was like a black swan event, like market just absolutely melted.
Yeah.
And I know a lot of people, one that I can think of off the top of my head, Sean Lee, I remember him posting, because this is when I was like avid.
Astro Joes, wow.
Obviously, this is how I came into trading. I remember him posting, I think it must have been on Instagram. It was a picture of him just lying on the desk. And I don't know exactly what happened, because I had no idea about anything. But I remember I was in this trade and it just tanked, and I was like, like, what happened there? What was that?
So basically, the Swiss franc used to be pegged to the euro. So every time the euro went up, Swiss franc would go up or down by the same amount. And basically, they decided one day to unpeg it. And that meant that the Swiss franc appreciated by, I think it was like 15% or something like that in one day. So in FX land, that is completely unheard of. Like, it's insane to see something like that happen. And so that depeg basically led to massive cascades. Brokers didn't know what was going on, and so their risk was all out of whack. Alpari went under because of it. They were an old broker. Now they only operate in Russia. And there were many others that got really badly hit. It could have really affected stuff. And basically what happens in that situation is that the prime broker, which would be the bank, where they will get their pricing from and who they have credit agreements with, they would request money. And if they don't have the money to pay it, then they can't do it. So they have to go and declare themselves basically bankrupt. And that's what happened. So it was a really, really tough situation. Luckily, I can't remember whether it was because I had negative balance protection or something like that, but luckily I didn't have to actually pay that loss out, but the account value was negative. Wow. Yeah. It's really
But a lot of brokers went under as well, didn't they?
Yeah. Alpari.
It was just like all like
from
the liquidated.
It was really tough. It was a tough time. So that was something that people always have a little bit of distrust around, especially with like how, the Japanese, the Bank of Japan recently, or in the last couple of years, have been doing yen intervention.
I was going to get into that. Yeah.
That's why people have been getting a little bit touchy over that, to what extent they might be able to mess the market up. They wouldn't be able to do it to the same extent as 2015 because there was no peg. But, what the Bank of Japan have been doing is they've been targeting volatility. So they've been trying to force people out of using leverage so that they could stop betting against the yen, basically. Now it's probably indeed the other way, yen strengthened, and we're all happy again. But that was basically their policy for the last year or two.
What kind of what's involved when it comes to like intervention? Like, is it allowed? What do they do? Because I trade in yen heavily. Like GJ was the only thing that I traded. And then I realised that these movements were just kind of happening out of nowhere. And then there was all this talk of like yen intervention because JPY was just pushing. Obviously USD JPY, which is probably the biggest mover. Like, what does that whole thing entail? Because I know for a lot of people that are watching at home who are like predominantly just technical analysis traders, they're not going to know the back end of the actual intervention of the Bank of Japan. So like,
So technically, it's the Ministry of Finance that actually does the intervention in Japan. So what happens is they'll take their FX reserves. So they'll take like, I don't know, their dollar reserves, and they'll just dump dollars on the market. Or they'll take those, what they'll actually do is they'll go onto the market and buy yen. And so that leads to the yen appreciate and dollar falling, obviously. But they'll buy so much. The thing is that they would actually go and buy or sell it from the banks directly. So what happens is if you're, say, the Ministry of Finance in Japan, and you're going to Goldman or you're going to JP or whatever 10 prime brokers who are the biggest FX traders in the world, basically, and you're going to them, I want to buy, I don't know, $5 billion worth of yen each, then they're instantly going to be saying, we need to offload some of our risk as well. So then that's what happens, is that not only do they fulfill the Ministry of Finance / Bank of Japan's order, they're also getting rid of their own risk too. So they make it like a cascade, and that's why the market moves so heavily when the Bank of Japan or Ministry of Finance intervenes.
it is crazy moves. Like for example, like GBP JPY, I think it was like 2 weeks ago, just dropped 500 pips. Just
Well, dollar yen was trading 161 on the 15th of July, and now it's trading 147, 148.
that's crazy.
Yeah, it was.
Nearly 2,000 pips.
And that's what I said. I said my trade of the month when I was doing a video for Axie was short dollar yen.
I remember you posting it on Twitter. Yeah,
Yeah.
you should have podcast about it, didn't you? And then like the week after.
I'm so good, honestly. I'm so good.
I got read that tweet.
I'm so good at this. It's
He's
ridiculous.
feeling himself right now.
I'm so good at this. It's insane. But yeah, it went like 2006, something like that. You know, it was almost to be expected, but it wasn't necessarily for the right reasons. But the setup was still right because we were coming close to US wanting to cut rates. You know, we knew what Japan's monetary policy stance was. US are cutting rates. You're getting down there, and the differential between the interest rates is closing, which basically means dollar weaker, yen stronger. That's the trade. It's not difficult to comprehend. And it's just really about managing that. Like, how do you get into the trade while not getting stopped out?
How do you get into a trade like that?
So you don't run stops, firstly. I don't.
Tell me that. I already don't trade with stops.
So, okay, so this brings about a very tricky question, and a very tricky thing for people to comprehend is that stops are actually very negative expected value. Because what happens is that most people get the direction right. The issue is that they don't necessarily focus on the volatility before the market moves in their favor. So they'll get stopped out and then the market goes their way. How many times has that happened? So what people need to focus on really is slightly increasing their expected duration of a trade while using a smaller position size. And when it starts going your way, that's when you scale into it. Rather than going full pelt from the beginning, getting stopped out, wanting to jump out the window, and then getting back into the trade, getting stopped out again, and then wanting to jump out the window again. That's what happens. So that's why stops generally a negative expected value. Where your stop should be maybe is defined as a worst case scenario.
Mm-hmm.
So like,
That's kind of how I trade.
well, that's good then. Like if it's in like 10% drawdown, say, that's where it should be. Not 1%. You're risking 1%. You're not risking 1%. What you're actually doing is fixing your risk at 1%, and the likelihood increases of your risk getting hit at 1%.
How would you go about that when obviously we're trading props? We have to kind of use, we don't have to use stops, but we have to have that like worst case scenario of like a 4.5 until we go over the 5% max daily loss. How would you manage it?
So it's part of an FX trading strategy more than anything. That's why I actually think that funded challenges are a volatility challenge rather than a trading challenge. There's two different games, trading a personal account versus funded trader. So I think I've mentioned a couple of times you can work out the expected moves of a market from options pricing. And so if you know what the expected move of a market is, roughly, okay, let's say it moves there. We know that FX mean reverts quite a lot. Let's say the expected move is, I don't know, 30 pips in a day. If your dollar moves down 30 pips, what might you do on a mean reversion?
Trade it back up
There you go. So then where you can fix your risk then is where your daily drawdown limit is. And then you can exit if there's a move back up to nearer. It doesn't have to be back another 30 pips. It could be 15 ticks or something. But that's really where you should be looking at, okay, how do we actually use data and the pricing of volatility to build a strategy that works within those drawdown limits? And that's why I was saying to you that I could beat from the challenge.
You're banned. David, I mean, you come from a background where you don't believe in the education system. You haven't gone uni, right?
I did go to uni.
Oh, you did?
Yeah, I did economics in uni.
Oh, okay, but you don't necessarily believe.
But no, I think in markets and anything practical is relatively useless. And I think most people should only go to uni for things like law, medicine, engineering, that kind of thing. I think economics is just pointless. Obviously, where financial firms will hire from, as you know, is like physics. Very, very mass-focused electric engineering or electrical engineering, whatever you call it.
Yeah.
All of these really mass-focused things. And I think...
How did you build yourself up to be the person you are today then? What is it that...
I think just, ironically, getting rid of my ego and speaking to people that know a lot more than me. Yeah, I know. Ironically, exactly, yeah. I know exactly what you mean. And so... I think that was pretty much the way. And also just throwing yourself in the deep end. Like, I think a lot of people are a bit scared of doing stuff. Whereas I think, really it's just the anticipation of doing something that's where the fear comes from. Once you actually do something, it's all right. But I think that learning experience and just getting acclimatized to uncomfortable shit. And that comes to learning as well. Like, all right, you might be reading an article. I don't know what this means. Let me just Google what that word means. Yeah. You know what I mean? Or that concept on finance. And then what I always go back to is trying to apply it in a real practical context and see in a way that it makes sense to me. Like you can read an academic paper, for example. I normally just read the conclusions. And I can see then if I go, say it's talking about stop losses, for example, and stop loss cascades, which is one of my favorite papers actually. That nerdiest thing I've ever said. But like how practical and how much can I actually get from that kind of theoretical stuff,
right?
And it's about filtering information as well. A lot of the information that you get hit with so much information, a lot of it is just nonsense and doesn't apply. So I think having a good filter for what you really need to know and what your level of understanding currently of a topic is, and whether it's worth knowing as well. There's some things that you could go down a rabbit hole of trying to understand, but it won't make sense to actually know it.
Of course, yeah.
And I also think that being a generalist is a good idea too. You don't have to get super, super specific with things, but know a bit about everything, but know the things or want to learn the things that you really think you need to know about, if that makes sense.
I agree. I do agree.
It's a bit philosophical then, but...
Yeah. So when you graduated from university,
how did you graduate?
Oh, you
No. I basically got to third year and I didn't want to finish the last exams.
You got to third year and you decided not to finish.
No.
That is the stupidest thing I've ever
No,
heard.
because I just did not apply myself in the third year. I was sick as well, so I'm diabetic, and then I just thought I can't be bothered, and they wanted me to redo the third year, and I was just like, no, I'm not doing it. Yeah, so. I didn't do it, but I don't care.
Look at me now.
It's literally not made a difference in my life at all.
Yeah.
So it's no one's ever asked me about it. I've never wanted to go and work at an investment bank or anything like that. I just don't see the necessity. I think once you work out the hours, the first couple of years you're on minimum wage anyway.
Exactly.
So it's just like
that's why I didn't see mine as well.
Yeah.
I've got 2 degrees and I've never used them and I never plan to.
Yeah, well, there you go. So, there's just different ways. And I think if you're able to be a relatively agreeable person, or agreeable is probably the wrong word because I'm definitely not agreeable. Sociable and understanding social settings and, how to approach people and get information, not in a manipulative way, but, ask the right questions. Can definitely help.
Yeah.
And I think doing sales as well is massive. You came from, I guess,
Sales, yeah.
just a salesy background. You know, again, putting yourself in uncomfortable situations and hearing no a lot.
Absolutely.
It's quite good.
And of course, I feel like that's where you can build up yourself and get involved in people who, as you said, drop your ego.
Yeah.
Drop your ego. You have to drop your ego.
Yeah, absolutely.
We did anyway. Speaking to people who are making times 20 what we were making, and who are PhDs, who have PhDs and like from the biggest universities, and sort of listening to them and hearing them out, it feels, like you learn a thing or two.
Yeah, absolutely.
Then you get involved.
Absolutely.
That's the world is a crazy place. The world is a crazy place.
Well, thank you for coming and joining us and having such a great conversation. I think this has probably been one of my favourite conversations, just because I don't think I've learned as much from another podcaster as what I have today, because all of this is like complete foreign knowledge to me. But no, thank you so much for coming and joining us today for the podcast.
Thank you for having me, guys.
You're very welcome.
Thank you so much for watching, and make sure you come back next week for another episode of Trader Talk.